Good morning, everyone, and welcome to this webinar. I am Sultana El Jazouli. I'm working as Chief Marketing Officer of Particip. And today I'm so happy and glad to welcome you to speak about the embedded finance, how to get ready for the future of financial services. This webinar is part of a series of webinars that we are organizing at Particip in order to shed light on the digital distribution of financial services. We have already had the first session on April, and we have gathered a lot of speakers to discuss about reshaping insurance distribution for a digital age. So to discuss our topic today, we are so happy and glad to be able to gather a lot of speakers coming from different areas of the industry. So we will be having a global consultant firm, an insurtech, a major bank, an association, and of course, a digital sales enabler. If we can go through the agenda, at first we will be having a first keynote of 10 minutes about embedded finance towards an invisible and ubiquitous financial and banking experience. It will be presented by Elias Ghanem, a global head of market intelligence at Capgemini. Elias is a reference in the financial industry by the insights he has gained through the position held on 4 continents. He has already worked for many corporations as Visa or PayPal. He is also an entrepreneur in the fintech area. Following this keynote, we'll be having a roundtable about the topic of our webinar today. This roundtable will be divided into 2 subtopics. The first one, it will be towards a service-oriented value creation for the consumer. And the second topic will be how can the financial sector win this revolution? To moderate the debate, we'll be having Vincent van de Winkel, who is a Class 7 consultant, but he is also helping banks and insurers to accelerate the digital transformation, but also by bridging the knowledge gap and also by the matchmaking. He's also Europe business representative of Particip. And the panelists of our roundtable will be Elias Ghanem, a global head of market intelligence at Capgemini. We'll be also having the pleasure to welcome Alexander Rispal, General Manager of the French insurtech Assurli, João Freire de Andrade, who is President of Portugal FinTech. We'll be having also Steve Fogg, CEO and co-founder of Particip, and Rui Negro Suarez, who is the head of Digital Bank Department of Caixa Geral de Depósitos. So now we'll be having the keynote, and I pass the floor to Elias Ghanem in order to present.
Thank you, Sultana, and good morning, everybody, and great to be with you. I understand that we have audience coming from all over the world, so amazing to have this opportunity. And if you go to the next slide, the objective of today is to share with you the main conclusions of the World Retail Banking Report that we published a few months back. Next, please. And the World Retail Banking Report is part of a series that we publish of World Report that we publish every year, where we tend to explain or to have a point of view on what is happening in the industry. We cover the banking sectors through the retail banking, the fintech, the wealth, and the payment, as well as the insurance industry with the insurance and the insurtech report. You could see at the bottom of this page our website, worldreports.capgemini.com, where you could find all the reports. Next, please. So if I were to deep dive into the World Retail Banking Reports, we've been doing it for quite some time, 18 years. So clearly you could imagine that from the beginning of the century, we've been tracking the evolution of the sector. And by all means, the retail banking, there is a sector that has been significantly transformed through crisis, as well as through customer expectation, as well as through digital, is through the retail banking. The title of this report this year, really to make the point about this evolution, is how to make a sustainable experiential banking. And to make this report, we make sure we listen to everybody. We listen to the end consumer, you and I as a consumer. More than 8,000 consumers have been surveyed and interviewed around the world. We also listen to the executive in telling us what is happening in the market and what could be done, as well as the partners that are the editors of software that are making the change. Next. So if I were to tell you in a very simple manner where we are heading, is we're heading to a new era. At Capgemini, we call this era Banking 4.x. And the big question that we are asking you and asking everybody, and we'll be discussing later on, is, are banks ready to lead the charge of Banking 4.x? What does it mean, all that? So, and how to make it happen? Really, three important messages. The first one, it's about embracing disruption. It's not anymore a following disruption. It's not anymore avoiding disruption. It's not anymore talking about disruption. It's truly embracing it, and align your priorities as a bank, your relevancy, and your resilience toward Banking 4.x. And bear with me, soon you will understand what Banking 4.x stands for. Once you have embraced the disruption, it's about embedding the banking in customer lifestyle, making banking ubiquitous and inclusive. And the only way to do it is not doing it alone, is doing it through a platform-based model. And to make that happen, you need to harvest the oil that you have into your bank, which is data. Harvest data and create experiential customer journey by personalizing your experience. So it's about embracing, it's about embedding the bank, and it's about harvesting data. Next, please. So let's start to get into understanding what is happening today. The COVID got us through a major change into the mindset. And when we went to the bankers and we asked them, what is your priority? We really got, from an IT, from a transformation perspective, we got two messages. One, it's about rethinking the IT spending. Look at that, 45% of the banks are planning to an increased outsourcing of the mid and the back office activity. The structure of cost is very expensive. The gap to move into innovation is really expensive. So there is not a single bank that can do it alone, and leveraging the ecosystem is becoming a priority. And then the second priority is about restructuring the operations, where about the branch network, the workforce, as well as prioritizing. And we are seeing large banks exiting some markets that are not so strategic. So this is at a high level. But if we bring it down into, we ask the bankers about what's next, how to move forward. And 40% of the banks are uncertain of how to move forward. And why? Because the day after is fueled by major changes. What are these changes? First, if you look at the bottom right of the slide, it's sustainable growth in terms of resilience as well as sustainability is essential. But if you combine sustainable growth with efficient platform bank, you come up with the first element of the Banking 4.x, which is the concept of embedded finance. But if I take sustainable growth, efficient platform bank, and I add to it the most important part, which is the customer centricity, I bring in the data element and the digital customer experience layer. And that's what Banking 4.x is. How to offer embedded finance, leveraging data through the right experience. And so say bye to open banking. Open banking is the concept that has been imposed on the bank by the regulator. Fantastic. And we had to embrace it. And many banks embraced it because invited to embrace it. Now it's time to move beyond into a much broader called Banking 4.x. Next. So the way forward is truly evolving from I do it all myself towards a banking as a service. And good to see that 38 and 28 of the banks are already into a bank as a service platform, either internal or external. If you are not in the 38 and the 28, you might be in trouble in the coming years, because the banking as a service is a major shift into the way we interact within the ecosystem. And why? for a very simple reason. Revenue are under stress, interest rates are quite low, costs are on the rise, driven by regulatory environment, driven by reorganization of the workforce, driven by digitalization. So you need to find the way to get new sources of revenue. Next, please. So what are the new sources of revenue? Is the bank becoming a supplier to others, to challenger banks, to fintech, or becoming a beneficiary of others' activities. So this banking as a service platform is a must, where I reach to others and I sell to others. And if you look at the numbers, 70% of the banking executives believe that banking as a service will help them innovate, create new products, expand customer base, and diversify revenue. Next, please. So we went also and asked the customers, tell us, what do you want your bank to do for you? And they told us, I want my bank to partner with the list that you see on the left to offer the services that you see on the horizontal. Who to partner with? Big tech, retailer, travel and hospitality, QSR, telco, fintech, and so on. So let's look at the top three: retailers, big tech, and travel hospitality. Your clients are expecting the banks to be very embedded with big tech, with retailer, with travel hospitality, across embedding the payments, embedding the wallet, embedding the experience, where if I go to a retailer or a mobility like the Uber of the world, I don't need to show my cards. The card is completely embedded, either through the payment directly or through the wallet. And the way to make that happen, it's easy said. What's the complexity to do it? It's really building the new forest that you need to build, what you could see on the right, about building a digital foundation and modernizing the core. Ladies and gentlemen, the core banking that you created in the 80s to get you to the Y2K is not the core that you need today in 2021 to build the future. So stop patching it, change it, modernize it, externalize it. But building digital foundation is a must. Move to the cloud, accelerate the cloud adoption. It's the only way for you to reduce the cost and expand the reach. And if you have the right foundations and the right cloud, you can move into the microservices environment through the API. And that's where the beauty of the business is about. Next, please. So we said earlier on about harvest the data. And the beauty of it is customers have made a major evolution in their mind about sharing data. 86% of the customers, we interviewed 8,000 of them around the world, 86% of the customers are willing to share their data with their bank, only with their bank, no other third party, or with anybody if they know the use of it. The data has become a tool for me to be rewarded. So give me that and work with me to personalize the experience. How to personalize the experience? By building the data ecosystem, by capturing data from all over the place, and not only rely on a risk profile, but rely on a customer behavior profile. Why is that? So you can manage it, you can analyze it, and you can deliver what is expected, hyper-relevant content, hyper-personalized products, and finally, the price that is important for me today, and you make me feel a segment of one. Next. So if I were to summarize all what you have said here, if we agree that banking 4.x is the way forward, let's tell you a roadmap to it. And any roadmap is about timing, short-term to long-term, and it's also about how to do it from internal to external. Let's look bottom left. What I should do now, immediately, internally. Shift to cloud, scale API, think banking as a service, and implement the right customer experience layer. Very few banks could do it alone. There are plenty of providers outside of startups that are doing it brilliantly well. Work with them. But while I am working on it internally, what do I need to do externally immediately? Drive inclusive innovation by having new product, new service, and collaborating with the ecosystem. If I do well the short term, I can move into the long term, top left, turn into experiential platform where I know my role. Am I a producer? Am I a distributor? And am I able to do customization, but at mass customization? And then evolve the branch. Branch is a fantastic asset or a very complex liability, converted in a way where you engage with your customers. And what's the nirvana? What's the end game? Is evolve as an inventive bank by being known for something. The biggest problem what we are seeing today is the blue bank, the green bank, the yellow bank are not so differentiated. And as a customer, my loyalty is quite relative to go left or right. Make yourself unique, identify your niche, and expand the customer base, reduce the cost by becoming much more embedded. That's basically in a few short lines what we believe is banking 4.x and the roadmap to make it happen. Vincent, back to you.
Thank you so much, Elias, for those interesting insights about embedded finance and embedded banking, and for sharing also with us the expectations of the customers. So before passing the floor to Vincent in order to moderate the roundtable, I just want to remind you that we have a chat box. So if you want to ask any question, please don't hesitate to use it, and we will try to ask as many as possible during the debate. And for the moment, I will share with you a quick poll. So if you can just fill it it will take you less than 10 seconds, I think. So we'd like to know, in your company, embedding insurance or banking services in ecosystems, is it strategic and well-established reality? Is strategic with the first initiatives being worked upon? Is a reflection we're having, is not on the agenda? We'll give in 10 seconds in order to fill the form, and then I will pass the floor to Vincent. We'll be sharing the results at the end of the discussion of the first topic. I can see that 100% has answered. Thank you so much, and we will share the results after. So for the moment, Vincent, you have the floor.
Okay, well, thank you, Sultana. Thank you, Elias, for such a great way to open our conversation and lay the ground for our roundtable to discuss how can the finance industry prepare itself for what comes ahead and for embedded finance. So in our roundtable, we are lucky today to have gathered some executives who, through their roles and responsibilities, have a great view of the trends that are shaping the industry in Europe. We will speak of two topics. The first one being towards the service-oriented value creation for the consumer. And the second one, how can the financial sector win this revolution? So who will we have around the table? We will have Elias, who has already been presented. Then we have also Alexandre Rispal, who is a general manager, chief revenue officer, and co-founder of Assurli, who is a neo-insurer of French origin, looking to transform the mortgage insurance market and become a European leader. Alexandre is also co-founder and secretary general of InsurTech France. Next to Alexandre, we have João Freire de Andrade, who is co-founder and president of Portugal FinTech. He's also executive director of Big Start Ventures, a fintech venture capital at Banco de Investimento Global. And he is also, in his free time, I would say, invited affiliate professor of fintech at Católica Lisbon School of Business and Economics. Next, we will also have somebody from the banking side, Rui Negrão Soares, who is head of digital bank department at Caixa Geral de Depósitos, a major European bank, with a presence in 19 countries on 4 continents. He is responsible for the digital business and transformation program of Caixa Geral de Depósitos since 2017. Finally, we also have our host of today, Steve Fogg, who is co-founder and CEO of Participe. Participe being a fintech that offers turnkey solutions for the distribution of insurance, banking, and investment products. Participe was created in 2013, has a team of more than 30 people, and provides in 2 to 6 weeks a SaaS solution to customers in Europe, America, and the Middle East. So, having done the presentation of our panelists, we will go and start off with the first topic, which is towards a service-oriented value creation for the consumer. And I shall start by asking Elias, can we say that all of the financial industry is headed the same way, that is, towards seamlessly providing embedded services through ecosystems? And if we are to consider retail banking, wealth management, payments, and insurance, how would you rate them in their maturity stage towards embedded services?
So by all means, in fact, it's not the industry that is evolving, it's the customer who is evolving. And thus, wherever the customer is, the industry need to adapt. And why do I say that? Clearly today, you and I have been used to a different interaction, mainly because of that being a phone, being a smartphone, where we are disconnected, we are not face-to-face, but we are in contact. And the smartphone is the link. As such, all industries, being retail banking, being wealth management on the two extremes, being the payment industry, being the insurance, all of them need to adapt to this new way of doing business. So to your first question, are all being affected? Big time. On your second question, who is most advanced? By all means, I see the payment industry the most advanced, not driven, by the way, by the banks, but driven by the new players. The PayPal, which is now a very old fintech, but extremely relevant. PayPal remains very relevant and very active through all the super apps. But then you hear a lot about the Stripe, the Klarna, the Square of the world, the Adyen of the world, and so on, where these players are changing the industry, the way we do engagement. The big tech are pushing it significantly. The Amazon, the Google, the Facebook, all of them are not yet into banking or insurance, but looking around. And the best example is Amazon recently, that now is offering in the US through a major insurance player some insurance channels of distribution. So who is most advanced? Payment by all means. Who needs to catch up quickly? For me is the wealth industry, in the terms of there is a major wealth transfer between an older and a younger generation. There is much more mobility, and there is much more willingness to be across several asset classes and to be across several countries to be the investment. So that's where we are today. Retail banking is in its major transformation journey. Insurance, depending which function, has digitalized, but many yet need to happen.
Okay, well, thank you for that insight, Elias. Coming on to you, Rui. Precisely, Capgemini says that banking is entering into the 4.x era, where it is embedded into customers' lifetime experience and made invisible. To do so, banks must rely heavily on AI to orchestrate data ecosystems, mine and derive contextual high-impact insights to design and then propose products to consumers. Can you tell us where CGD is in this respect? And do you have some use case that you can share with us?
First of all, good morning all, and thank you, Participe and Vincent, to inviting me to be here and to have this talk with you guys, with this interesting panel and with an interesting topic. Let me just give you a little bit of background as I see it in our point of view. We are in the battle of relevance, or in the war of relevance. Banks are a means to an end, and we are not the final destination of a customer. The main needs of people are food, shelter, mobility, entertainment, health, etc. We do not provide them these goods and services. So we can enable them in the present by payments and credits, or in the future by savings and through savings and investments, but we are not delivering those. So to be relevant in the consumer journeys, we need to be present in those flows. We need to be present there. So we are in the battle of relevance, because we have to be there to be relevant to our customers, because people do not come to a bank to have a house or to buy a TV or to make it a holiday in Cancun, whatever. So that's the starting point, and we have to realize this. And I think it's the first thing that we need to have in mind when we tackle what's our current situation, what's going to be our future, and how can we be relevant in the future. What we've been doing, and particularly not just Caixa, I think most of the banks are with several speeds and intensities have trying to see this. First of all, this is lay the ground from the basics. I think it was Elias in the presentation has done is mentioned about the basics, the things that you need to do to have it behind the scenes that are in the first infrastructure, that you have to have it. The digital layer, I think it was the expression was the digital layer that we must have. So what we have done in Caixa for the last 3 years is something that is behind the scenes, is trying to put those infrastructure, the basics done, the digital foundations done, namely in terms of data analytics, the cloud. So the expertise and know-how that's very important to deal with with these changes. So in fact, enabling the technology part and enabling our IT framework, let me put it like that, to be able to deliver different and taking new approaches about the business. I'm not, in the last 3 years, I've been doing that behind the scenes, let me put it like that, but these are the basics and the foundations. You need to do that. If you don't do that, you'll not be able to position ourselves on a different way and be there be relevant to customers. Something that we have been doing in front of the scenes, it's taking advantage of the PSD2 and the open banking world, let me put it like that, and launch the box that is our open banking solution. The box was not launched as a banking app, but focusing on helping people to manage their finances on a more comprehensive way, and leveraging them with information to be able to make wise decisions and simple decisions with effortlessly. So basically putting in the hands of customers, users, full control of their finances, independently of the bank where they have money, or independent of what the bank where they are doing the banking part of their life, and focusing on their financial life and helping them to manage. That's we manage, and we have now almost 90,000 users, of which 1/3 they are not CGT customers, so they are customers of other banks, because that's the focus is not managing the bank, is managing the personal finance of each family, of each user, and helping them, enabling, using what? The foundations that I mentioned and Elias mentioned before, the data, information about customer on a more comprehensive way, insights that we can obtain about the expenditure of each customer, and giving them personalized advices of how they can reach their goals and how can use their money on a wiser way and reaching their project. So basically, this is one thing that we have done in the front of the scenes. It's the box app that was 2.5 years ago, but it's more to come in behind the scenes. That is the foundations that we need to build, and that's the biggest investment and the biggest mindset change that we need to do, and we are doing that.
Okay, great. So thanks for that view. So you are indeed deriving contextual high impact insights using AI. So indeed, you confirm that the richness of data is important. And coming to you, Alexandre, I would like to ask you, with respect to insurance, Capgemini defined that the CARE concept, where C stands for convenience, A for advice, or E for reach. They say that the traditional insurers must augment their CARE capabilities by collaborating partnering or acquiring insurtech specialists? From a service perspective, which letter of care is more crucial for the consumer?
Well, maybe we can make a step aside, and what we have seen over the past 7 years in the insurance industry is an iterative process to embed insurance. So it came originally from Asia, and it expanded in Europe around 2015 and 16 with some initiatives with players in Belgium, in France, such as Cover in Belgium, in France with players such as Moonshot or Wacom in PNC mainly at the beginning. And what was key at this stage was to have a full capability to provide APIs, microservices, to be able to integrate a customer journey. Saying that, it was quite difficult at that time to reach the customer, because what is key also is to understand the final customer. And when you are a player from an insurance background, you need to understand what a retailer, what a telco, what an energy provider finally is selling to the final customers. Otherwise, you just do what we call affinity products without innovation. So it took time, probably 4 to 5 years, to be able to provide a scalable model. Above the technology, there are 2 key points. The first one is the execution and the ability to integrate. And the other end, you need to understand in the B2B2C model, the C. Otherwise, you're not relevant. Of course, traditional incumbents right now are investing heavily to do also this type of initiative, and also to be able to work in their group environment. If you take the example of the banking industry, lots of them have captives, so they need to be integrated also into the banking system. So from the Assurely perspective, what was very important for us as a brand, B2C brand, but also B2B2C provider in white label or co-branding, was to be able for the embedded part, the second one on B2B2C, to integrate rapidly. So we wanted to develop and to launch a product in less than 1 month for a big account. So that was something very key for us. So we worked heavily on the operation side and the delivery, but we also wanted to have the proprietary technology, both on the front end with the ability to provide an application. And I totally agree with Elias. Today, it's on the mobile that you need to understand how people react and to understand the behaviors. And you need also to do the back. And by back, I mean you need to create a product, but also to integrate into the algorithm, the consumer lifestyle and new types of data. Just to take the example on mortgage insurance, that's today the key product we are delivering. And our mission is to become the leader of credit insurance to the insurance credit consumer in Europe. But the idea is to integrate, for instance, the number of steps they are making each day to have a reward and a discount on the mortgage insurance. And we are providing additional services. And finally, in the end, we consider that embedded insurance is key for prevention and for wellness. And the final purpose, finally, is to transform the original mission of insurance, which is to handle claims and to reimburse people after claims, to avoid a claim. And that's what the technology is allowing us.
Okay, so it's a mix of concepts, of letters, I would say, that makes it successful. Okay, João, beyond insurance and banking for .x, favor embedding financial services in ecosystems, as we have seen. For that, a great user experience and the analysis of data is key. Can you tell us how the fintechs match this need of the incumbents?
Mm-hmm. So let me start by thanking you the invitation, Vincent, Participe. It's a great pleasure to be with you here and all the panelists. Getting to your question, like I think we have to look this. It looks very evident that we should be at the spot. Like I'm buying a flight, and I don't want to go to another app or even less a branch, a physical brick and mortar branch to buy the insurance for that flight, right? Like I do it on the journey on, and there's many like digital like ways of buying tickets that's doing that for a while. So it's not new. It's a journey that people are used to it. It's basically passing to new types of insurance and getting a little bit ubiquitous on that journey. So I think incumbents, you asked about the incumbents, and they have clients, which is very important. So clients already interact with them, and some of them have carry capacity and broker capacity. So that part of the license and their capacity, it's also important. It's also very important. On the other hand, you spoke about the insurtechs, the fintechs, and of course these startups, like they are very important in the sense that, as Elias was saying, like to kind of shorten the gap, to do it a little bit faster, to do it cheaper, and basically trying to test fast. Like they could help a lot. Like rather if it is user experience, like some of them already get very interesting and curated and tested in multiple markets, multiple customers, nice user experience. And I'll give specific examples in a second. But they also get lots of tech capacity that they develop just for that specific thing. So there's many man hours, many investment on that specific part. And I'll also give examples about that. But of course, data, just having data is useless. Like if you can't use the data, or if you can, but you don't use it, like it's useless. And I think typically what you see, it's of course like possibilities of cross-selling, but also like learning with what a customer is willing to do, or learning like what's broken on the UX. And that's pretty much where we think data, it's pretty important. We could go into all the steps of knowing more about the customer, all the telematics fields, or like everything but I'm at the basics. Like it's just journey, like every single digital area, like e-commerce, marketplace, like they're doing this for ages. And I think the tech scene sometimes, the financial sector was a little bit more stricter in that, and cooperating is a good word, like to speed up that. So to give, so if I can pass a message, like doing that fast and cheap and doing this loop many times, it's absolutely essential, and it's something the incumbents are starting to do. But I think with startups, that's much more, it's easier. Okay, of course, you're gonna fail, but it's a controlled fail, like in the sense that you learn with where you're failing and you release the second thing. But if you take 2 years to launch a embedded insurance play into something, like you can't fail, right? But the market's not there anymore. So to finalize and to make it a little bit more specific, I think we should give some concrete example. Like, and fortunately, myself being from Portugal fintech, we get extremely interesting examples such as Lovis, such as Habit Analytics. Like Habit, it's doing very interesting on embedded finance. Like they bring their tech capacity. Imagine if you are a e-commerce or marketplace, like you can embed them and use their broker capacity. But if you are already a broker, like for example Caixa, it's a bank, but so they also have the capacity to sell insurance. Like you can use your own insurance, and they handle like the onboarding, selling, maintenance, claims management. So all this life cycle that sometimes industries that are not insurance, they are not agents, like they don't want to deal with that. Like the guys are streamlining and waiving all these operational burden. And another great example, a little bit more on the UX side. So Habit is more for the tech side, or the UX side, for example, CoverFlex, which they've created like a portal of benefits where you can very easily go around different types of benefits. But you can, one of these benefits, they are embedding like typical compulsory types of insurance for your business. They sell to SMEs, just to be clear. They also like enable the employee of the SME to invest like health insurance, use their benefits for health insurance, life insurance, or even wealth management products such as pension funds, unit links, other types of products that a person would like to have as savings. So I think being on the journey, on the go, where you are already doing, it's key. Your question about data, absolutely essential to have a good UX.
Okay. Yes, thank you for that indeed. So I understand that what's the fintechs, insurtechs bring is this agility and this speed on top of expertise that can then be used by the incumbents. And precisely going on to a fintech, Steve, can you please tell us what Participe does, or what can be done to instantly acquire customers and if you have some use cases that you have identified for an invisible finance purchase experience.
Good morning to the audience, and thank you to all panelists to be here today. It's a great pleasure to share our insight on embedded finance, which is, I think, the next big fintech revolutions. According to a recent report of Salesforce, 52% of the customers expect personalized offers. And as we said previously, the bank of tomorrow will be driven by the end customers. And those financial services has to be increasingly personalized to meet those customers' needs, and must be offered at the right place at the right time, because the customers is now passive. So if we are talking about personalization of a service just alone, we can notice that it can increase a business value of more than 10%. And with the open banking, the DSP2, and right now the open finance, the bank must be a part of their customer lives, and the banking product, the financial services, need to be integrated with other services, other industry, all type of device. As we said before, it can be platforms, it can be mobile, it can be IoT, it can be a restaurant, a physical point of sales, to become completely invisible. So as the financial services are directly merged into the customer's moment of life, this leads to maximizing the customer acquisition and the customer's satisfaction. If we try to illustrate that with just 3 examples, the first one is, for example, a real estate purchase. Okay, so if you want to buy a house, and you are able to underwrite, to subscribe to your real estate loan directly from the website of the real estate agency, this is the kind of perfect example of embedded finance, and this is how a bank can become invisible. The other example that was mentioned before is the use of Uber. So you can pay for Uber without having to take out your card, and this is another example of how a bank can be visible. And the last one, which is booming today, is the 3-time payment. So it's a kind of instant funding of an act of consumption of any kind of good or services. So these trends towards the omnipresent of the bank, of the invisible bank, is driven by the APIs, as we said before, the technological innovations, the evolution of customers' needs, of customer use, and the change of the distribution of financial services on any kind of web, mobile, financial or non-financial platform.
Okay. So that's a good way, illustration of how we can turn the services of banking or insurance invisible and ubiquitous. Okay, so I think maybe what we can now have a look at is the results from the poll that was asked, which now should show up on your screen. So to the question we asked, in your company, embedding insurance or banking services in ecosystem is so we have the largest one is strategic with the first initiatives being worked on. So that's a good sign. I would say 47% are already or have the first initiatives, and 28 have already advanced or already quite advanced on that topic. So we have more than 70% that are of the companies that are already working on embedded finance. Anybody wants to comment on that from the panel?
Yeah, I could take the first comment. Amazing to see that there is 50% that are starting to work on it and 20% that are thinking about it. This is 70% that are not yet doing it at scale, if I see the glass half empty. And for me, it is a challenge. We've been talking all together, and I like Rui's point of view as a banker. It's not about shall I or shall I not do it? Shall I start or shall I not start? It's really shit. I am late and I need to do it at scale. And when I see 70% saying, yeah, it's somewhere in my mind or on a piece of paper or with a trainee doing something about it or with a consultant thinking about it, by all means, it's good, but maybe it's kind of late into the train of transformation and the train of banking 4.x era. So just an alert of the speed of transformation.
Okay. Anybody else wants to add something to that?
Let me just add something to Elias' comment. It's not just I'm late. My speed is not enough to catch the train. So it's better to speed up, because you are late and you are not driving in the speed enough to catch the train. That's important.
Yeah. Rui, fintechs will help you. Don't worry.
Exactly. That's where I was going.
That's another dimension. Yeah, I agree.
No, I would just to put a little bit of spicy on this. Like basically, like the people answering are very already looking into the subject. So if we did a broader type of survey, the results would be even more alarming. So just to add on what Elias said, like to put a little bit of more pressure.
Okay, well, that only proves that indeed we are talking about a topic that needs to be tackled right now. So I'm happy for that. Okay, so let's go on to our second topic. Now that we have seen that the industry's future lay in offering value-added services there and then, where the customer is, without him having to switch environment, the next question would be, how does the financial sector get there? How do the stakeholders integrate this necessary change to win this revolution? So starting off, I would ask Rui, what do you think are the key drivers of change to embrace this revolution in legacy banks and in CGD in particular?
Okay, basically, it's so much things to do, some such drivers. Let me focus on two. The first one is mindset. Think outside of your box. Let me put this in three ideas. We are not the center of customer life. We need to realize that. So we need to go outside of our own platforms and either by digital or physical, because it's not just digital. We're speaking about a lot of digital, but the physical people live in real houses and go to real shops. So we have to be there also. So and be there and be relevant there also, because it's a part of their journey. So we are not the center of the customer life, so we need to go outside of our own platforms. And this is from a bank point of view, is it's a first switch in terms of mindset that we need to do. Second of all, we don't have all the expertise or the experience needed. So we need to partner, as Jean was saying, with fintechs, like we did at Think. For instance, we knew nothing about APIs and open banking. We partnered with someone that knew that and that was an expert on that. And this is not the traditional. This is not traditional solutions of the banks. They first try to do it internally, and they do because they want to have all the expertise internally. It's not how we can speed up the process of innovation. Is not how we can speed up the process of catching up what's running behind. And third of all, that's it. And this is very tough for a bank to say, and I think for most of organizations, there are others that do better things that we do also. So there's someone that is doing better, and if he's doing better, why not partner with them? Or even replace what you do and how you do it by embedding those solutions in your own solution. Like for instance, know your customer. There are some good guys that do that. So why not embed that solutions in your own platform? So there are some people, and what we have to do is partner with those people and embed those solutions in your solutions. And this is a completely shift in a traditional bank mindset and a traditional organization, and this is a revolution by itself. This change in mindset. So one of the main driver is this one: change mindset, think outside of the box, or some of your current convictions and true beliefs. And the second one, and I'll just finish here, it's internal organization. We need to build internal to break silos internally. So we need to organize the process and the way we develop things and manage products and services in a completely different way. So we need to break silos, and we need to have, let me put it like that, it's like lots of internal fintechs that work as a fintech to build this transformation. So I think those two topics so have a different mindset, a very completely different mindset, and second of all, change the way you are organizing internally to address the challenge. I think that those are the two main drivers to embrace and to change the banks as they are.
Okay, well, indeed, quite a shift in mindset. And precisely going on to Alexandre, we said that one of the recommendations for incumbent insurers is also precisely to partner with insurtechs to win this revolution. Is partnering with traditional insurance companies part of your strategy, Alexandre? And if so, have you noted a change in attitudes towards such partnering?
Well, definitely, when we look at the industry at large, either insurtech or fintech, I think that 5 or 6 years ago, there was a sort of theoretical opposition between both. And what we have seen is that the ecosystem is interdependent. Some insurtechs and fintech bring technologies or certain know on how to access direct customers or intermediaries. And the idea is to create smooth processes of collaboration. And I think that is something that is more and more understood by both parties, specifically in B2B fintechs or insurtechs. So I've dropped some names at the very beginning, but I was talking about players such as Cover, Wacom, Moonshot in Belgium or France. That's what we are doing right now with Assurely, with mortgage insurance. So we are working and discussing with traditional insurers, banks, even if we are developing our own B2C brands. What is important is to be able to understand precisely the strategic goals of the incumbent and to set up, I would call that agile process to be able to act rapidly. The trap that some insurtechs and fintechs might encounter is that if you stay 1 year or 1 year and a half to launch a project, it will be nearly a deadly trap for the startup. And even if you're well-funded, it could become a nightmare. So the idea is on how to work together effectively. So that's the first step. And maybe to open the discussion, but what we see is that it's not the opposition fintech or insurtech that will drive the market with traditional incumbent. It's how we can partner together as an ecosystem to be able to put entry barriers to newcomers coming outside the industry.
Okay, indeed. Well, I mean, it seems that by your comments that it is more generally accepted that collaboration between incumbents and fintechs is a win-win relationship. How does an association such as Portugal FinTech promote this necessary collaboration, João?
So yeah, that's that's a great question. Listen, you were the Rui. Rui spoke about Caixa. The mindset is perfect. So why isn't it adopted massively? Like, and there's many reasons. Like I can't tell you like the reason, but actually Portugal FinTech is working a lot to do so. Just to remind them, we are always fintech centric and insurtech centric. So we try to get this to grow. So that's why we work like with key pillars, like helping the fintechs getting closer to the talent, to the regulator, to the investors, but also with incumbents, with mature players. And specific to that, like we were like during years trying to matchmake, to help things working. And what we understood, it's not easy. So since last year, like we got something called fintech solutions, that it's exactly helping incumbents to kind of take roadblockers out of the way, because there's will, sometimes lack of technical capacity, lack of time from the innovation teams, mentality. So this team brought together something very interesting, like this fintech solution, which is called the POC, the proof of concept canvas. And it's like 4 major pillars, but once, so if an incumbent wants to do what we spoke before, testing fast, ship a POC, a proof of concept, it's a possibility, definitely. And basically, and it's more and more like part of the selling process of companies. Like it's organized way for the incumbents in a B2B sales, instead of doing like a super long sales cycle, try to test the waters quickly. And to do this POC, like I think it's pretty important to really like make sure your motivation with the POC it's correct. It's not just like tourism. It's not just something to put at the report. Like that's very important. Like having a specific use case, something you're trying to fix. Like it's not just innovation per innovation. Like I'm trying to increase my sales, my cross sales in insurance once I'm doing like a, let's see, imagine a consumer credit journey. So one example, like it could be other things. Another thing, it's you really have to define the scope and the actions, like what are the validation points, like what do you really want to learn, like what is a success, what's a failure, like, and try to have specific metrics for that, like measuring. Then engaging the team, like if governance internally it's not well structured, who's the owner, who's the touch points, like, and trying to since the beginning like kind of understand and kind of take roadblocks, like in terms of risk, compliance, marketing, brand, like it's from all over the place, the blockers, like it will be hard to conclude things fast. And in the end, of course, basically like it's once you finish, look and understand if you scale, if you stop, like it's slow nose, it's something terrible. Like just be specific, like it resulted, it didn't result, or it could result in another way, and then do another experiment. So basically, like this POC campus, like it's totally available on.
Okay, well, indeed, I think I like that approach. It is very much project management to make sure that indeed all the processes are well followed, and then also all is well documented to then at the end, well, make sure first of all one has a goal, and then at the end measure how much you succeeded in getting to that goal. So I agree, that's a very useful tool. So thanks for that. Coming on to Steve and something a bit more technical. Do you think that a no-code solution is the must to win the revolution of embedded finance, Steve?
I think first of all, we need to emphasize on the key advantage of using a no-code solution, because a no-code solution is a kind of powerful and innovative tool to initiate really quickly a digital transformation, a digital transition with non-programming staff and at lower cost. So it's offer you, as you said before, the agility to test and launch your offer really quickly on the market and adapt them based on customer feedback. The second thing is that it's increased really drastically your productivity, because the IT staff is not involved anymore. And this have an effect to speed up the go-to-market when you want to launch new offers, as all the tasks are managed by business teams. So the ongoing embedded finance movement we are discussing today is supported by the change in customer usage and the change in distribution models. It means that any financial or non-financial actors, any kind of company, at the end must be able to offer to its end customers financial services as an integrated or complementary services in order to maximize the customer satisfaction. So an example is of integrated services is the three-time payments, as we were discussing before. And another kind of complementary services is, for example, an insurance on a mortgage. So you buy a house and you need an insurance on a loan related to this house. If we try to project ourselves in the near future, we all agree today that the bank of the future will be 100% open, will be 100% platformized, and will be integrated in any kind of any point of contact of the end customer. So it can be a physical agency, it can be on the web, it can be on the mobile, it can be on IoT, it can be among all kind of non-socialized players like marketplace. And if you need to be along this vision and to take the train, you need to face three kind of challenge. The first one is the innovation in order to embed the financial services within your existing customers' interface without changing them. The second one is to reduce the impact on the organization, the impact of the technical infrastructure when you try to integrate financial services to your existing offering. And the last one is to limit the cost, to limit the investment you are done in order to add these financial services to your existing offer. And at Particip and on Particip perspective, we strongly believe that only a no-code solution is can help you to meet those challenges, and that's why we create on the Particip side the solution Particip Plug, which is a no-code solution for online distribution of banking, insurance, and saving product. So in fact, it's just a kind of solution that allowing you to create digital versions of financial product and services, to edit online the user journey around these financial services and wrap it into a line of code or an URL so that you can integrate it easily in any kind of customer's interface or in any kind of partner interface.
Okay, thanks for that, Steve. So if I understand well, no code is a synonym of agility, cost optimization, and I would say also proof of concept that Jean spoke of, that you can set up quickly and test and make sure that, well, before scaling it to further activity. Thanks for that. Elias, of all the conditions that need to be satisfied to be successful in an embedded finance strategy, what is, in your opinion, the most crucial?
So I'm going to start by giving you a statement that we did into our FinTech report that we published a few months back. We called it Banking in the FinTech Era. And it says it all. 5 years ago, we did the first FinTech report, and we called it the FinTech element into the banking. 5 years later, the table has turned around. It's for banking into the FinTech era. So at risk of provoking Zhao, if you are yet into doing POC Canva, I would suggest you update your resume because there is a lot that has passed already. It's not about POC. It's not anymore about POC. By the way, whenever I coach a startup, I tell them if you go meet a bank and the bank tells you, hey, let's do a POC, I invite you to stand up and to say, bye, not interested. Because I believe that POC is behind us. It's more about now innovation at scale. At Capgemini, we talk a lot about moving from open innovation to applied innovation. And by applied, we say it's not a POC. It starts with an MVP and it scales within a year. So it's more the speed of the evolution. And for me, listening to the great participants here, I come up with the 3 T when it comes to changing. It's all about technology, it's all about talent, and it's all about time. Technology, talent, and time. What I mean by that is, and each one of them has an internal focus and an external focus. Technology, we talked about it later on, and Rui took it quite well, is the foundation. You remember the tree that I showed? You must have a modern core. If you are thinking new with the old, well, you don't do much new with old. So changing the core is a must. But once you've done that technology, so it's about changing it, it's about moving into the cloud, it's about APIs, so you can connect with the ecosystem. Going today and meeting with the ecosystem outside and telling them, oh, I don't have an API structure, telling them I don't have a governance to connect, I don't have the cloud for you to embed your solution, will not drive anything. It will drive fantastic conversations. It will drive plenty of POCs that will end up in a press release, but it will not drive change at scale. When it comes to talent, having the right people is essential. A banker or an insurance company, main business is to reduce risk, right? That's the main objective. And we've been paid for that for years to make it happen. Startup, on the other side, is to maximize the go-to-market, and maximizing the go-to-market comes with risk. So mix the right talent, improve the talent mix, improve the talent mindset of your own organization. So when you made them meet with a startup, they are ready to collaborate. And finally, it's time to move. It's time to move away from POCs. It's time to move away from the lab. It's time to move into business. It's time to move into effective collaboration, mentioned quite well earlier on. And there is an amazing matured scale-up ecosystem. Work with them. If you want to do POC, go with the startups. If you want to do innovation at scale, go with the scale-up. A scale-up is a company that will have enough track record, years of experience, enough team building, and enough budget to support the growth and enough people. So look to these factors of the technology, internal and external, the talent, internal and external, and the time to go to market. Because as we've been seeing for the last hour, the customer mindset has evolved, and there is more and more fintech outside that are evolving from becoming enablers, from being enablers to become competitors. So the time is now to collaborate at scale to make the fintech make you become a better bank or the better insurance to your clients.
Okay, well, indeed, that's still a further evolution in the mindset and something indeed to also to be present in the incumbents' mind when they wish to board the embedded finance subject. Okay, thanks for that comment. Yes. Talking about insurance and the GAFAMs, Alexandre, how are the traditional banks and insurers getting ready in the light of the GAFAM arrival? We know that Amazon and other players are starting to move, also to want to propose their financial products. How would you say that the traditional players are getting ready for that?
Well, from what we have seen so far, we were talking about the necessary processes of collaboration, and I'm not talking on the Asoli side for that point, but mainly for the InsurTech France general conclusion we have seen. There are too many behaviors that try to kill the innovation at the beginning. So some traditional incumbents try to buy very rapidly, or to get all the information and the know-how at the beginning of the startup. So there are still unfair behaviors at that stage. So that's a point that needs to be improved, definitely. On the other hand, you have some few players that are well aware that they need to change, that they are not capable to do it alone, and that have launched very interesting initiatives. So I can't disclose the name today because some of that in mind are under NDA, but I think that things are clearly evolving on the right path. But the traps Elias was mentioning for the POC or the more aggressive side for the buyout for an early stage startup, it's still a trap, because I think that innovation internally can't be driven at the same level as what you do outside a current corporate environment. But that's a personal belief.
Okay, so innovation is indeed still the key also here, and on the technical side or the Participe, can you please share with us, Steve, how you also drive this innovation in Participe, and how, well, in general, I would say the fintechs also who need to be are the innovative partners most of the time. How do they how are they on top of the innovation scale? Can you share something on that?
Yes. On Participe side, as you know, innovation is the key, but the innovation must be driven by the customer needs. So on Participe side, we make a lot of research in order to identify what will be what are the customer needs and how fast we can provide to our clients, which are banks, insurance company, asset management company, a turnkey solution to fit those customer needs. So in what we are talking about innovation, I think we need to first of all manage the tenants. So this is the first thing. The second thing is to manage the connectivity between the different technology, because when we are talking about the distribution, we are talking about sharing data between two systems, and as you know, the systems are completely different. So you need to create a kind of I don't know, translator in order to allow two IT systems to discuss each other. And the last point, when you are talking about innovation, is to build the feature that really fit the market trends. And right now we are talking about embedded finance, which is the key market trend. And the key question is how you can help a non-financial actor that are not sensitive to technology to become a digital actor and to be involved in the financial service distribution. And when you are discussing about that, you are discussing about investment. So that's why you need to bring to the market no-code technologies. You are discussing about expertise. That's why you need to standardize the financial product to allow them to be integrated to the existing offers. And at the end, you're talking about how they can generate additional revenues based on this innovation. And that's a key thing today, and how you need to monetize this trend on open banking and open finance.
Okay, well, thanks for that insight, Steve. We are coming to the end of our time, but I just want to ask one last question to Elias. I think we've spoken about embedded finance. Embedded finance is embedding services, financial services in all types of ecosystems. So, Elias, in the future, who will lead the financial service offering? Banks, insurers, or retailers?
The answer is all of them, right? It's not a black and white answer. Banks and insurer are the trusted third party that has been with me all my life. So they're not going to disappear immediately, right? Retailers is very transactional. Bankers and insurance are part of my life, right? I trust them in my bank account. I trust them in protecting my house, and trust them in helping me to retire, educate my kids, and so on. So the trust factor is huge capital for the banks and insurance. They should work on it. The transaction side is much better on the retailer and new ecosystem. So if there's a way that the two work together to get me the Uber experience, where I am being taken from point A to point B by a third party, which, by the way, doesn't own a single car, but is giving a very good service, and where payment is embedded, and where geolocalization is embedded, and where loyalty program is embedded, and all these are pieces of a puzzle, well, I will be satisfied by all the people. So for me, to conclude, bankers, banks and insurer are essential into my life, they need to gain back the customer experience.
Okay, well, I think that's a great way to finish off our talk. The customer experience, which is prime. Thank you all. I shall give the hand back to Sultana.
Thank you so much, Vincent, for moderating the debate. A warm thank you to Elias, to Rui, Alexandre, João, and Steve for being with us today and for sharing your experience. A warm thank you also to the audience. We hope have brought you new perspectives.